XRP holders, I believe that it is time to absolutely buckle up, and I'm going to explain to you guys why that is in today's video. It looks like extreme levels of volatility are returning. Now, if you know anything about major central banks, they do not like major amounts of volatility because it makes it harder for them to predict where the future is headed. And so we're seeing a really interesting phenomenon happen right now. And I do think that XRP is going to see some extremely wild swings, much like what we saw just a few days ago in the next few days here. I'm going to explain why I think that, what the technicals are saying, which absolutely support that, what banks are doing, which once again absolutely support that, and what even retail is doing, which I think is extremely interesting. We're in a really awesome moment in history right now where we're setting all new kinds of records, and I think that's not going to stop anytime soon. And I think XRP is set to break some massive records in the very near future as well. So with all that being said, I want to start by talking about what major central banks are doing. What we're seeing, and as you can clearly see from this chart right here, is the Bank of England, Japan, the Fed, and the European banks, the European Union banks, they're all lowering their balance sheet. Currently, the ECB is reducing assets by 60 billion, the Fed by 35 billion, and the Bank of Japan by 10 billion, and the Bank of England 5 billion per month on average. This is insane. We're talking about over 100 billion here in lowering of their balance sheet per month right now between all of these major massive world economies, some of the largest in the world. In the past, when a significant amount of liquidity was withdrawn, the market saw heightened volatility. And of course, this makes a lot of sense when you look at M2 and how this affects M2. You expect to see a lot more volatility when the supply is, of course, growing, right? And so a lot of people are calling market volatility setting to return. You know, a very notable time that was similar to this, which you can see right here, was just before 2020 and during 2020. We were seeing all of these same banks all lowering their balance sheets. And then you saw right here, well, obviously it changed. There was a huge reversal, and this was during the bull market. But what's very interesting is what's happening right now. These guys are all offloading like absolute mad. Like they think something massive is coming and they want to have a lot of cash on hand. They either think there's going to be a massive market crash, or they're just not wanting to take any risks right now because they don't know which way the markets are going to be headed. And there's some other really interesting things that we can see also. Once again, I just want to point this out real quick. We saw the same thing happen back in 2008, but what's happening right now is unprecedented. We've never seen it happen at these levels, nowhere near these levels. And so that's interesting to say the least. What we're also seeing is there have been 64 rate cuts globally year to date, which is the most since 2020. This puts 2025 on track for the highest number of reductions ever seen on record, according to Bank of America. The European Central Bank alone has lowered its rates 4 times so far this year. The Bank of Canada, the Bank of England, and the Swiss Bank have each cut rates twice, and the Reserve Bank of New Zealand and the Reserve Bank of Australia have cut their rates 3 and 2 times respectively. And meanwhile, the Federal Reserve of the United States, they're signaling a continued pause. So what is giving here? I mean, obviously something needs to change, but these banks are feeling a tremendous amount of pressure. The debt, you know, that it's, you know, a lot of people are worried about, you know, complete insolvency, not being able to finance their debt. The banks have to lower their rates in a lot of these regions. There's a lot of economic uncertainty and a lot of economic pressure, and these banks are preparing for it. That's why they're doing this, right? What they're doing right now. And you can see right here, this is the cumulative rate cuts per year. You can see right now we're on trend to outpace 2024. And we don't know, 2020, what's going to happen here. But in the US, you know, obviously if we joined this, it would, of course, cause this number to go up quite a bit. But we're outpacing 2024 so far. You know, we're breaking a lot of records right now. That is for sure. So we're going to keep a close eye on that because it's very interesting information. We're also seeing, and this is really important, this does relate to cryptocurrency, by the way. I just want to point that out, that U.S. existing home sales fell 0.75% year over year in May to 4.03 million annual rate, the weakest May since 2009. 2009 financial crisis numbers, home sales. That's what we're seeing here. Right, this is after, I want to point this out. This is after banks had issued so many completely bogus mortgages where everyone was defaulting on them back in 2008. After that, and the sales numbers started to drop significantly following that, we're at those levels of home sales right now. I mean, just look at this chart. Look at this chart. Look at like the early 2000s, 2004, you know, and then what happened here up to 2009. Then we saw a big spike and then an even deeper plummet back down here all the way in 2010, right? We saw an insanely strong housing market in 2020, 2024. Now that has once again fallen off a complete cliff. Economists are looking at some of this data that I'm showing you guys, and they are extremely concerned. Like some of them are saying, okay, this is crazy. We have these banks making these moves. Like these banks obviously know something, right? You have all these rate cuts, right? And then you have home sale data coming in really weak, right? I mean, this is showing that the markets are pretty soft, pretty weak right now. There's not a lot of free capital flowing around, right? And this is despite some of the rate cuts. Now, there's two ways of looking at this. And I want to make this very clear. This could not necessarily be a bad thing because on one hand, we have Bitcoin and many other cryptocurrencies, you know, going and hitting, you know, numbers they have never hit before, right? XRP hit all-time highs, you know, Bitcoin hit all-time highs, you know, a lot of other cryptocurrencies have hit all-time highs. It's incredible, right? Maybe not a lot of altcoins outside of XRP, but you guys get what I'm saying. And then you see housing numbers are weakening and housing prices in a lot of cases are actually going down and sales numbers are going down. The listing to, you know, actual sales ratios are, the gap is growing, which is a weakening sign. And then, yeah, what we're seeing is what retail is doing is probably the most interesting. A lot more people are buying stocks, a lot more people are buying crypto. And then there's a lot of weakening happening elsewhere. So retail investors purchased a net $3.2 billion of stocks in 5 days through Wednesday. This is a sharp reversal from the prior week's muted activity, according to JP Morgan, and individual investors favored ETFs over single stocks, pouring money into broad market gold and energy equity funds. So essentially what the most of retail investors are doing right now is they're just putting their money into relatively safe assets. They're not trusting real estate as much right now as they were previously. And they're just saying like, hey, I'm going to go into ETFs. I'm going to get exposure to a bunch of different industries and I'm just going to hold these ETFs. We're also seeing that retail interest in Magnificent Seven remains dull, accounting for just 2% of retail's portfolio allocation. So a lot of ETFs, not a lot of big 7 company investments. Retail investors are just diversifying right now. They're becoming risk adverse, basically. They're saying, hey, I'm going to have a little bit here, a little bit there, ETFs that have like 20 different companies in them. That's what I'm doing. Really interesting. And then crypto is, you know, and the stock market has been hitting new highs. We saw a new weekly high close. Amazing, right? And crypto is also doing relatively well, everything considered. I mean, XRP's at 220. That's awesome. Our long position's up in the profit. Awesome. Now, what I'm seeing when it comes to the stochastic RSI and the FBB from a technical perspective is something that definitely deserves your guys' attention, something you definitely want to, in my point of view anyways, buckle up for, just be aware about. That's all I'm saying. Not financial advice. I'm just saying this definitely begs a lot of people's attention, I think. It's something that you should be aware about. The daily stochastic RSI is overbought, right? We look at historical examples of when we were overbought, like right here, just a few days back, June 11th, a couple weeks ago. We were overbought, big correction, right? Right up here. We were overbought, big correction. Right over here. We were overbought, correction, overbought, correction, overbought. We fell off a cliff. Okay. I think volatility is returning, and the initial reaction from the markets is going to be a correction. I think we're going to see a V-shaped recovery as we've seen many times before. An example was right here, 19th of June. We saw a V-shaped recovery. We got back to the same levels where we came from, right? We were at 218 right here. A couple days later, we went as low as 190, and then we came right back up to 220, right? V-shaped recovery. That's exactly what that is. We saw that happen, over here, V-shaped recovery more or less. Over here, V-shaped recovery more or less, right? We see a lot of Vs. I think we're going to see another V. We're overbought right now. That's generally what happens. I think there's going to be some really good opportunities to buy these dips. Now, there's one more thing that actually also supports my estimation here of what's going to happen. If you look at the FBB, you can see that we're moving and we're very close to the top resistance line. Once again, every single time we touch this top resistance line, I'll show you right here, we see a correction after, right? Right up here, we touch the top resistance, we come down, right? just a little bit back. Oh, sorry guys, just a little bit back over here. We touch the top resistance line, we come back down, right? Right over here, we touch the top resistance line and we come back down. It's like clockwork. And when you factor in the FBB and the stochastic RSI together, you can see there's a lot more downside than there is upside right now. Now, that does not mean that we cannot move up more from the price that we're at right now. We can go up to $2.30 per coin on the high end before we hit the top resistance line and we see what has played out many times previously, right? Which is a correction. But I am betting on XRP going lower sometime in the next 3 to 4 days, and I am gonna get ready to go crazy, buy like insanity, because the last time I did this, like the last 100 times I've done this, as you can see, all these buys right here on these red days and these sells on these green days, I've made money doing it. And you guys can get access to all of my trades completely for free by joining Crypto Crusaders, my Discord, my Telegram. It's free. You have no excuse but to just try it out and just see my entire history of trades and join the thousands of other people who are benefiting from it, okay? So with that being said, to get access, you sign up on one of my 2 partnered exchanges, BitUnix, BTCC. Awesome bonuses here, guys, for both. You know, see which is available in your region. Make sure you double check that. Deposit, submit your email. Boom, boom, boom. Once you do that, you'll get an email with access to the Discord and the Telegram. And yeah, it's really that easy, guys. Okay, so I'm extremely excited. I'm going to be taking advantage of this opportunity, just like I have the last 10 times, maybe even more than that in the last 6 months here. We've been going crazy, trading a lot. Please note, nothing I say is financial advice in these videos. If you enjoy the content, please smash the like button and subscribe. Check out Levi Crypto Crusaders linked down below, and I'll see you guys very soon. Peace out.